Okay. So this is our crash 300. So crash 300, structure-wise, we have been uptrending. That is the fact. Uptrending, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That was the latest higher high. So now, after doing that, I have this key area here. Let me just. Okay, so let me just mark out some key areas here on the daily time frame. I have this first key area here. This was a key area. Touch, touch, that's a touch, touch. First touch, second touch. So basically extending this, we expected every touch to follow here to give us some selling opportunities. So we did catch some selling opportunities. If you still remember, we did catch, I think this move here, we did catch something, then it went back up. So now that area here is still a key. It's a very key area, that's line here that I just marked. You actually need that area on your chart because the move that we're expecting is for price to come back now and touch that area. Because here, what price did here, that's a fake out. This is a fake out of this area. Faked out, went out, came back in. That's a fake out. So that fake out now, every fake out always follows with whereby price has to come back and touch where it had to touch. Because here, according to this key area here, price was supposed to come here and reject there, then go down. But here it faked out, but came back down. So this move down here, it's simply showing you that sellers are still very much in control. On this area here, they are very much, sellers are very strong here on this level here. Sellers are very much in control on that area here. So on that current price, sellers are very much in control. This was what resulted. So this move outside and this move inside, simply showing you that sellers are still much strong. So now this price has to buy and come and touch the key level again. Then this time now, it has to come and reject, give us a rejection. That rejection, it will simply be a lower high. It will be a lower high because it will be lower than that one. Lower high, then we go. So that is also something that we are currently looking forward to. Go up there, give us a rejection, then so that rejection is simply a lower high now. It's lower than this one. So if you check here, high, 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 high. This was simply high highs. High, 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 high. So now we anti-shift in market structure, a lower high, which is something that can happen here on that area here. So this zone here, we simply mark out this zone here. It's actually a key zone, that one. Key zone. You can actually mark it on your chart, mark that area, go to the daily, draw that line. Then we simply wait on the smaller time frames for that move to happen. Once price reaches that area, we simply look for a rejection on a smaller time frame. Then we strike. So that is one key area that we currently have right now on our crash 300. So even if you take a look at your let me just remove this. Okay, so this is the key level. We drew it based on a daily time frame. So if you remember, somehow these cells, we caught them. These first initial ones, we actually caught them. If you remember, Rati, these cells, you took them. You were the first one to take them, actually. These others, they missed them. If you remember, these cells, this first, let me say this first downward trend line, you took it, then price went back up, then we took these ones again. But now price went back up again. So these ones now, I still remember my Jew was the one who took earlier sales from above there. Made some money somewhere there. Then it's crashed all the way. Then went back up again. So right now, what we now want now. So if you check now, here it has been failing to do the move that we have been expecting. Here it faked out. After faking out, came back and gave us a rejection like that, which is something that was good. Fake out, went back to where it was supposed to go, give us a rejection. Fake out. After this fake out, we expect price to go back where it was supposed to go, which is this key level, give us a rejection, then go down. So that level there, mark it on your chart. It's a very key level, very, very key level. Once price goes there, give us a rejection. 15 minutes, once we get a rejection, we simply enter. Our stop loss would be, so if you check this rejection, imagine the stop loss, how much it was. It was a very, very tight stop loss. Even if you go to 15 minutes, it was a very tight stop loss. Same as here, our stop loss will also be very tight according to the 15-minute entry that we're going to enter. So that is our first major, very, very key level that we have that is going to determine the entries that we're going to take for crash 300. So on the daily, what I simply want are simply more key levels at the bottom that can give me some exit targets where price can go and reach then most probably. So it's simply the same thing that we do. We simply identify key levels. Simply trying to identify key levels here. So from there, that is our first key level. Second key level, I now look at rejected, broke, retested. This is also a key level. Once market comes and breaks this area, because this area as well, according to market structure, it's a higher low. So as a higher low, if market comes and breaks a higher low like that, it can come and make a lower low. So meaning it's also a key level. Once that one is broken, market can continue going down and make a lower low, then continue with its downtrending wave like that. Then from there, we also look for another key area. Key area. Let's see. So these areas, they mustn't be too close to one another. If you see them too close to one another, somehow, something would be not right on your lines there. So this area here, I can also take it as a key level, respected, and it's actually far much distant apart from that one. It's also okay there. Then the last fourth one, this one as well, rejected. So other areas are easily identifiable. This one, you can just simply mark it as the lowest level that price has reached so far. You can simply put that area as well. Same as here, this was the highest level that price has reached. If you check there, once price reached, it's crashed. So same as here, once market comes to this lowest price that it has reached, once it breaks this one, we can simply get more sales to the downside with our Fibonacci and other confluences as our targets for taking profits. So that area is also key level, respected. So all my key levels right now, they have been drawn. These are the major key levels that I'm seeing on crash 300. So whenever you're trading levels, once another level has been broken, price will go to the next major level. The first major level here is this one. From here, we expect price to crash all the way to there. Once it breaks there, we expect it there. Breaks there, breaks there, breaks there. So basically, if you check even here, as it was going up, went up, broke this key level, went to that one, respected, broke this one, went to that one, respected, rejected, retraced, I mean. From the retracement, broke this one, went to the next one, retraced, broke this one, went to the next one, retraced. So now, we are still now within this one now. So basically, once we get a rejection here it has to reject now. Give us a rejection, come back to this level, break this one, come to this one, break this one, come to this one, break this one, come to this one, break this one. So that's why I'm saying plus 300, I kind of have a very, very long-term bias on it, a long-term bias on it, whereby if price breaks certain zones, I expect price to crashing all the way for a very long time. If it breaks certain areas that I'm going to mark out here on the chart. So this is also another trend line that one can use to actually see an overall break in the trend. You can also use a trend line like that to identify an overall break of a trend. So that is a trend line that one can actually draw on their chart. Touch there at the bottom. Touch there, and touch there. So first touch, second touch, third touch, went all the way. So this trend line, once price comes and give us a rejection there, we expect price to drop. Once it breaks this trend line, definitely we're going to have longer term sales because this is a freeway zone. This is a freeway zone. Below this trend line, it's a free selling zone. It's a safe selling zone, a major selling zone below this trend line. Above it, it's a major buying zone. Below this trend line, that's my major selling zone. My major selling zone. Major selling zone. Major selling zone. So once I've identified my major selling zone like that, even if I get some selling entries there, it's okay. But I know the break of this one is going to give more sales. The break of this trend line here, it's going to give us more sales, even all the way to this bottom key level here. So we'll just be looking at what price will be telling us, then we respond according to what price will be telling us. So we scale down to a lower time frame, the 4 hour. So on the 4 hour, we can as well put that trend line, because I think this trading view somewhere is not that 100% perfect. It's different from the normal trading view that we use for currencies, which can save all the analysis and not delete anything. Or so this one, first touch, second touch, faked out, came back to test all the way up. So this trend line here, below my trend line here, it's the same thing that happened on VIX, whereby price broke out of the major channel. Once we break out of the major channel, we go all the way down. The VIX went all the way down, then began to retrace to the upside, upside to retest this broken area. Then now we are simply coming down as well. So it's still the same thing. These markets, they move in a similar way, very similar way. You just need to identify the similar moves that are happening on that particular market. So it's still the same thing, guys. These markets, they have a certain similarity when it comes to movements. They don't move all at the same time, the same way, but in their different time zones, they have a certain similarity that they obey when it comes to the market movements. So this zone here, it's a very key zone, which is my selling zone currently. Put it in yellow. I'm expecting a serious rejection there on that area. I'm expecting a serious rejection there. Serious rejection. Then we come to this trend line. On that trend line now, whatever will happen here will determine, are we going to continue selling, or the market is simply going to continue with its uptrend, because we are in an uptrend overall. So once price comes and gives a reaction here, it will simply be a lower high, because it will be lower than this one. It will simply be a high lower than this one. So it will actually be a shift in market structure. Once we have a shift in market structure, definitely we can actually start selling there, here, this key level here. So someone can even come and place a trend line at the top in case this price decides to do the unexpected, because there are always unexpected moves on the market. There are always unexpected moves on the market. Right, if you check this trend line here, so it's another trend line. If you check the way that we draw trend lines, if you remember what we spoke about, whereby you see this bottom trend line. If you want to trace the perfect trend line at the top, you need to look for the top that resulted in this low. So if you trace this low back, if you take that one, this one is not as accurate because it goes way, way far. So if you trace the overall move, this one, if you realize that this area was the one that resulted in this low, this high here was the one resulted in this low. So basically we draw the trend line, the top trend line there, touch, and touch there. First touch, second touch. So that actual drop is started here on the third touch for a trend line. But overall, if you check this trend line, is still in an upward channel. That's why I said outside of this channel, it's a major selling zone. Outside of this channel, it's a major selling zone with our key levels as our major targets and also Fibonacci's as targets as well. So that is our current view. That is what we're currently looking at. So now we simply will now wait for price to come there. We simply now wait for price to come there on that key level there. Once it comes there, gives us a rejection, we'll enter our sales nicely. We hold, these ones we hold, these ones we hold. These sales that are going to happen, we are going to hold for longer. We're going to hold up until it comes all the way to that bottom trend line. Once it comes there, we now want to see, is it going to break or is it going to continue with this upward channel? So from the 4 hour, this is actually a clear channel. You can also have such a channel on your chart and also mark out your key level where you're expecting to start selling the crash 300. So going to a lower time frame now, we're simply now going to, it's simply a waiting time now, because right now we most probably expect price to push all the way to that zone here. So everyone who missed the sales, all these sales that started there, they actually have an opportunity. It's another chance for you. It will be another chance for you. So I also draw my Fibonacci on the 1 hour, whereby the drop, point A, point B. So here we've already broken 38.2, broken 50%. Now going towards 61.8, but basically I expect price to push. So here it can push, break this one. Once it breaks 61.8, it can come all the way to 78.6 and maybe start crashing on 78.6. Maybe start crashing on 78.6 there. So once it starts crashing there on 78.6, our first target is always the 0% when it comes to the Fibonacci. So this one, it will simply help us to shift our stop losses. Whenever we have this Fibonacci, maybe on 1 hour or 4 hours, it simply helps us to shift our stop losses. For example, if price crashes our way, we simply know when to shift our stop loss basing on the Fibonacci breaks or support and resistance breaks. So you don't just shift a stop loss to break even. You simply wait for a break of major areas on the market or major Fibonacci's. Once you get those ones, that's when you can now shift your stop loss to break even. So crash 300, this is the current lookout. This is the current lookout. This is the current lookout. Someone can even have a trend line here. Touch there, something like that. So something like this. So we simply expect price to come, give us a reaction of 78.6 Fibonacci, which is our key level and also our major resistance. Once we get there, we simply drop all the way to that area. So that is the first possible scenario, is for price come to a key level, key resistance, then crash all the way to this zone here. That's the first scenario. Then the second unlikely scenario is for price come all the way up, break this key level. Once it breaks this one, it continues. Maybe it comes back to retest this high there. Maybe it comes back to retest this high, then maybe come back down inside this resistance. That is also another possible, like unlikely. It's an unlikely scenario an unlikely scenario, but we are also ready for it. Even if it happens, we'll also be ready for it. So basically, whatever happens right now on Crash 300, we are mentally ready. We are mentally ready. Mentally, we are already ready for it. We are ready for it already. So once price comes to our key level, which is our key resistance, we simply get a rejection, 15-minute. We simply enter based on that 15-minute rejection. Then our stop loss also based on the 15-minute, but our target based on a higher time frame perspective. So that is our current lookout. And also, if you look at it here on a 30-minute perspective, there's already a break of a trend line here. This is a trend line also that has been broken. Touch there, the trend line. So the break of this trend line, it was retested the first time, yes. Came, breakout here, retest, went all the way down. So now price is almost here on 61.8. So if ever price does not come to our key level, which is the 78.6, and it may be rejected here on the 61.8, someone can even attempt to get some sales there. But basically now, I expect price to go all the way to the key level because it's a level that wasn't retested on a higher time frame. So that is my current lookout for. So that is the current view. That is the current lookout for our crash 300. So here we are saying we also have a key area here. Key area here. You can even place it there. Key area there. So the break of that area as well can also maybe show that maybe price can now come to the key level. Can maybe show that price cannot come to the key level. So just in case now price does not come to the key level, just in case price does not come to the key level and begins crashing from where it is, you also have this trend line here at the bottom here. That's a very, very sniper trend line that can actually also help you on some sales that can happen if price does not come to that key level. So the break of this trend line, touch there, can also give you some entry points for the sales. So it's also a key trend line, touch. Once you break out, you can actually also sell based on that as well. So that is the current lookout, guys, for our crash 300. That is the current lookout for our crash 300. We actually hope and expect price to respond according to what we are seeing. Even if it doesn't respond according to that, we are ready already for different scenarios to happen. So whatever happens, we are simply ready for that. And we'll simply, so if you remember what we spoke about, that market always has moments. So if ever you don't know when the moment is going to be, you are at a disadvantage. If ever you know where the moment is, but when the moment comes, you don't strike, something is also wrong with you, because what's the use of knowing something if ever you are not making use of it when the moment comes, guys, when it's time for the moment, when the moment comes, you simply need to enter, because already where you have done analysis, when the moment has come, when the market has come where you were expecting it to come, it's no longer thinking time now. It's no longer time to think twice. Once the market comes to where you were expecting it to come, it's not the time to start thinking and scratching your head. It's actually the time to start entering based on confluences and confirmations that obviously you'll be getting on the smaller time frame. But it's not the time to start thinking twice, because the time to think twice is now, before price even reaches where you're expecting it to reach. So right now, it's actually the time you must be thinking and scratching your head before price goes where you're expecting. Once price comes to where you're expecting, it's no longer thinking time, it's actually action time. I hope we are clear on this one.
It's clear.
Nigel, are we together?
Yeah.
So I hope you are not going to miss trades, guys, because if you see the way this thing has been crashing, here it crashed, came into our zone, crashed, broke this trend line, broke out here, retested. This was a simple entry here. Simple entry, breakout and retest. Breakout and retest are very simple entries. One could have sold there. Your TP is always here based on this trend line. First touch, second touch. This was your first TP. So now, same as here. Once it crashes and breaks this trend line here that we have on the 30-minute or on the 15-minute, you can simply sell. Then your first target, you are simply looking at this trend line. Once we break this trend line, this is now a major selling zone, and we can actually hold longer. Are we together?
Yes.
Yes.
So that is what we are currently looking at. That is what we're currently looking at. And that is what we're currently expecting. So we simply fold our hands as we wait for price to move and act. So that is it for Crash 300, guys. Any questions? Any questions?
No.
No.
Okay. That is wonderful. Wonderful. If people they don't have questions, it shows they are understanding. So here, as I said, the second scenario, once we break this one, break and retest there, we simply sell, because a price would have maybe possibly failed to retest all the way there. It can come all the way to the downside, maybe from there, maybe now retest there. So here we are also waiting now. So VIX, we are simply waiting. Same as the Crash 300 was also now waiting. So waiting time is not trading time, people. Waiting time is simply analysis time, whereby you're simply perfecting your analysis whilst you're waiting. Perfecting, seeing things twice, calculating things twice before you even enter any trades. So waiting time is simply time to relook on your analysis. Is it making sense? Reanalyze whilst you're waiting. Then once you have fully understood your analysis, once you're fully confident over your analysis, you now simply wait for price to come to where your analysis is at. Once price comes there, it's now striking time. It's no longer thinking time now. That is not time to think when price comes to where you were expecting. Are we together?
Yes.
Okay, so I hope we're not going to miss entries. So we'll just be updating each other in the group. We're also going to have most probably another Zoom maybe later on, so that we simply look at the progress of how far the market has responded to what we're discussing at the end of the day. So we're going to talk with the group and meet at the end of the day.
Okay.
Yes.